going to talk about tax informational reporting. Don't you love that topic after lunch? So it's a true test of stamina, true test of stamina. What we're going to do is, this is a topic that applies to most everybody in the room. Some of you are sure how it applies. Some of you are not sure. There's a lot in the middle. So the goal of this panel is to demystify a lot of this stuff, make it practical. We have a no egghead policy on this panel. So we're going to talk about, what are we talking about? What do these rules mean? How do they apply to you? How do we get ready for something that is coming to us near real time? So quick lightning round of intros. My name is Rob Massey. I'm a tax partner at Deloitte, and for the last 13 years, I have focused on crypto. I'm on the tax side. We do everything across tax, auditing, consulting, big into the advisory space, but we've believed in this space for a long time, and it's so nice to see it coming live. One of the key foundational principles is data and accounting and records, and we've been really pleased to work with Bitwave now for a number of years. So great to be here, and I will hand it over to Bill.
Great, thanks, Rob. And again, great to be here. My name is Bill Sheridan. I head up the tax solutions business at S&P Global. Obviously, a lot of you folks probably know S&P from our ratings and indices, but we also have a group within the business called Market Intelligence. Our tax business sits within there, along with other areas such as regulatory reporting, KYC onboarding, and things like corporate actions. So great to be here.
Peter.
Yeah, Peter Larson. I'm a principal in Deloitte's global information reporting practice. Live here in San Francisco. I moved out here in about 1996, and so I've gotten to see the clients evolve through pre.com, Web 1.0, 2.0, 3.0. I heard a 4.0 shout out earlier, so it's been fun to be on that journey. And really quick, thanks to Bitwave for deciding to host this in such a beautiful setting. Being a resident of the city, it inspires me to look out the Golden Gate Bridge and think about the history of the journeys people have been on coming to this area to really establish it as a leader in technology. So it's great to be here in this particular spot.
And hi, I'm Chris Ligori. I've worn a lot of hats over the years. I work with Bill in New York. My background, I was at PricewaterhouseCoopers doing taxation of financial instruments. I was at a hedge fund. I was at State Street Bank, where I built and ran their Fatgun CRS fund admin business, and that's where I met Bill. And now I'm working with a lot of the digital asset crowd in information reporting and a lot of the issues and concerns that come up in relation to it.
Thanks, guys. Thanks. All right, so we're going to kick things off and just level set. Look, we have rules. And for the first time, digital asset was the first defined in the Internal Revenue Code in information reporting, right? This gave us a very broad definition of digital assets. That made it real. Along with that came some reporting requirements. So we have rules. These rules have a lot of teeth. But beyond just being compliant, Peter, why do we care about this? Like, why do we, I mean, look, we all want to be compliant. Everybody in the room, I know it. But why do we care beyond just compliance?
And I think the real thing to remember with tax information reporting is this is about your users and their tax experience. Governments figured out that to effectively administer tax systems and effectively collect tax revenue, if they can put that burden on third parties, they'll have exceptionally better compliance and collection rates. And all of the things we're talking about here are designed to make your users feel like if they don't pay tax on whatever they're doing and whatever platform, and that they're going to get called out.
Yeah, I would just echo a little bit of that as well. It's the user experience. Obviously, there is a compliance nature to this as well. You want to make sure that if you are and we're going to get into this in a second, if you're an exchange or a broker that has to do that reporting, you want to ensure that you are compliant first and foremost. But the user experience is that extra added point for the exchanges and the brokers to do this in an accurate manner. Bearing in mind that if you misstate some of that reporting, you're going to have a client who's quite upset with you, and you're going to have then on the back end a client success or a client services issue dealing with those customers as well. Bearing in mind, we will touch on some of the compliance issues. That's a big focus, but the user experience and dealing with your customers, making sure that they're getting accurate statements and reporting is just as key to the compliance as well.
And some of this is going to be an investor education process because you still will have customers who are shocked that digital assets are taxed. They still think it's magic and it's not subject for tax for some reason. Unfortunately, and so you need to make sure they understand what this is getting reported and why it's being reported, because it's not going to necessarily match up. Because as we'll discuss, there's covered securities that require basis reporting, and there's sometimes you'll only be getting proceeds, sometimes you'll get cost basis. You'll have to understand why, and and make sure they understand why it might or might not match up with their own information.
And so it's an interesting balance, right? And it's one of a few tax topics that impacts deeply the organization, the one remitting the payments, but also the receiver. We've mentioned customers a lot. It could also be vendors that you really care about. And so, and this, I think the rules here have put all of this front and center, saying it's coming at you. You guys talked about a lot of, communication, very open communications, what you're going to get, what you're not going to get, because the rules aren't going to answer every tax question for every person. But really making sure you've got that hygiene in place and probably some planning in advance to make sure we've got everybody well understanding what they're going to get, because it's a pretty tough topic, right? And just to be clear, the teeth put in this, right? Can we just call it out? If sure. It's not just a penalty for a form. Can we just define backup withholding just to make it real?
Yep. You want to do it?
Sure. Backup withholding is 24% of the income amount plus proceeds. So it's not just the income you've earned, it's the actual proceeds from the transaction as well.
Gross number.
Yeah.
Gross
Gross number. So if you've got a lot of little transactions, you're only getting a little bit of fee. That's not the number we're talking about.
Yeah.
We're talking about the gross volume of funds moving to another party.
And
It's a
it
big
doesn't,
deal.
and it doesn't matter if it's fiat. If it's a digital asset that you're using as a foreign for payment, backup withholding applies to property. And so if you've ever had to work through, how do I apply a 24% withholding on a piece of property? That's a operational challenge.
And so there is some transition relief currently. We, not to scare everybody in the room right away, but there is some transition relief. But obviously that does go away shortly in 27. So we will, again, need to start focusing on the reporting. And I know we're going to touch in a second, what's near and dear to our heart as well at S&P is the due diligence, because while the main focus is on the execution on the 1099 DAs, and I'm trying to remember, there was a panel earlier, they said, what scares you the most is 1099 DAs. I mean, the Treasury's estimated there's going to be 1 billion forms issued. And we're only talking about the gross proceeds to start. We haven't even talked about next year when we start talking about cost basis.
So we scared everybody.
Yeah.
Good job. Good job. We've accomplished that goal. So these rules are coming upon us. The first forms, 1099 DA, are going to start launching from various companies in January.
Yes.
It's October.
Yeah.
This is around the corner. So what are we thinking about? What does readiness look like? Particularly those who are not yet on the journey and going, I just looked at the calendar. So what does readiness look like for this really complicated topic?
You want me to start? I can't remember who we started with. So I'll just go back to the point I just made a moment ago. Yes, we should all be looking at the actual execution on the 1099 and how we're going to aggregate that data. But the first step in this process, and it sounds very silly to mention, but it's tax documentation. What I mean by that is W-8s and W-9s. So in the TradFi space, this is very common. People, you onboard a customer, you get documentation. Why it's so important is because in the regulations it says in order to report effectively or accurately in compliance, you have to have a certified TIN. Certified TIN, the only way you get that certified TIN is through the collection of a W-8 or W-9. As a best practice, also, what a lot of clients will do is, and account holders, they'll verify that TIN against the IRS TIN matching site. I know for TradFis, this is something very simple, but I'll use a real use case that we have right now. We have a client, one of the largest exchanges. We've been working with them for the last 6 months doing a remediation. We've done 5.5 million TIN matches and validations in the last 6 months, and there's more to go before the end of the year. So large-scale remediation has to be done in advance because, again, unfortunately, a lot of the crypto natives did not know, in fairness, they didn't have these regulations prior to when they were onboarding clients to get an accurate W-8 or W-9 from their clients. So there's a big remediation that's taking place before we even get to the actual execution in January for the reporting.
TLDR, if you don't get it, you might be required to back up with
Correct.
which is tough.
Well, I want to point out, TradFis do see this as simple to some extent, but
Yeah.
they still mess it up.
Yeah, they do.
Oh, yeah.
And,
Right.
and if you look at the size of the resources TradFis dedicate to this topic, it's substantial. And being in the Bay Area, I've seen with kind of the Web 2.0 crowd, we've gone from companies that had a controller responsible for all their tax information reporting to now having teams of 10, 15 people embedded in the business with the product team. So there's a transformation that often needs to happen to do this right. And that's not just because of the penalties, but it's also the user experience. And you got to be connected to the business to make sure that you're doing this in a way that keeps the brand of the business, keeps the user experience the way the business
And in an efficient manner as well.
Yeah, exactly.
You guys have made a big assumption here, in that the rules apply. Are we sure? We've got all kinds of new wacky business models out there. Shouldn't we
Well-
start with, does it apply or not?
Yeah, I was going to say the silver lining is it doesn't always apply to everything in the first year. So you do have to make sure you know what's in scope for reporting. Proceeds are going to be in scope for a lot of these positions. It's not going to be in scope for DeFi, for example. It won't be in scope necessarily for NFTs. But if we're talking about tokens, if we're talking about stablecoin, things like that, that generally is going to be in scope for reporting on the gross proceeds. Cost basis, and is where it gets fun because you have to be tracking that basis, starts in the next year. And that gets driven first by positions that were put on from the beginning of the year, stayed in your platform, and were sold in that same year. It gets more and more complicated, very similar to the way that the 1099B was rolled out, if anyone remembers that.
And it's not just a one-size-fits-all question, does it apply or not? I mean, typically you have to go product by product, payment flow by payment flow, transaction by transaction, and assess, is this particular transaction or this payment flow or this product in scope? And then if it is in scope, well, what do we want to do about it? Do we want to make all of our users go through the due diligence? Or do we want to carve out populations? Do we want to be proactive? Or do we want to wait till the very last minute to bug that person and say, nope, we're not going to let you continue doing whatever you're doing or withhold whatever, right? How are we going to enforce those policies?
And going back to
Yeah,
that
go
point, though, Peter, is like if you do wait to the last minute, and we have seen this with other clients where they do wait to that last minute, and guess what? Now they've got that client experience issue that we were talking about a moment ago. So,
Don't hit them with a surprise.
yeah.
And a lot of times that phone call doesn't go to the tax department, it goes
Yeah.
to another part of the business, and it's a crisis.
So wait, customer service people talking about tax? How's that going?
Oh, great, you know.
That scares me a little bit.
I mean, that's where a lot of investment is being
Yeah.
made, is for people who are being thoughtful about this is, what do we want on our website? What communications do we want to have? How are we going to train the first line of defense? Do we need a second line, third line of defense if things get complex, et cetera?
And again, building it into that initial client onboarding is something that definitely folks are doing now. But I go back to that point I made a moment ago about the remediation. It's one thing to fix something on a prospective basis, but then going to the back book, if you will, is that's where it gets interesting in some of these conversations.
So and you mentioned onboarding. There's something I don't think we heard mentioned, and that is the collaboration with other onboarding processes that you might have general KYC, AML in customer onboarding, right? This isn't just the tax person.
Yeah, fully. And it goes back, I think we're just kind of making the joke about client success or client services. But yeah, there's folks within the onboarding, and I'll kind of tie in a lot of the conversation. Chris mentioned about education, not just education to your customers, but education within your organization as well. Because again, there's only so many folks, and actually in a lot of organizations, they don't even truly have a information reporting person in that group. So working to educate not just your customers so you don't hit them with that surprise, but also educating the folks internal to the group so that they can speak to that effectively so you avoid those really awkward client conversations.
Right. And the data is really clear. If you get the information at onboarding, it's cheaper, it's faster, it's a lighter touch with the customer. You'll have less remediation over time with them because you've gotten it up front. They're expecting to fill out the information, they're expecting to answer questions, they're expecting this type of activity. If you have to go back after the fact, it's catch as catch can.
Yeah. Peter, we have clients all over the spectrum here. Do you really think clients are expecting 1099s? What is that? How do you think that's going?
The users?
Yeah.
Well, I mean, I have clients who already get questions from their users, where is my 1099, even when it's not required? So I think people are all over the map on that, and I think what I try to coach my clients to do is to really communicate to the business about who are our users, what are their expectations, we need to worry about the IRS and the penalties of the back withholding, but are we really meeting our users' needs here and making this a positive interaction rather than a surprise, now I'm going to get audited kind of experience?
Yeah, because at the end of the day, you're doing them a favor. You're, providing them cost basis is doing the math for them, which they generally don't want to have to go find all their statements.
Yeah. And even though it's not required to be reported immediately, we're pretty sure customers are still going to come to the platform and say, where is it?
Yeah.
I need that information.
This is a really important point because the rules, first of all, cost-based reporting not required now.
Correct.
For some transactions, it will never be reported
Yep.
because it's not a covered asset. And so there's a massive expectation gap. We do have some clients like, oh, I might get a 1099. I don't have to track my basis anymore. Wrong. We have a real problem in setting those expectations now. What are you going to give your customers? What do you not? And this goes back to primarily brokers. But I think there's a massive expectations gap. And so and these are probably important relationships that we have that we need to take care of and curate in advance. And again, it's October.
Yeah.
And I think it's also important that you be able to articulate to your business where you are on this spectrum, right? Are we one of the people who are out of it and it's clear? Are we taking an aggressive position? Or are we clearly in scope and now we need to mobilize the company to address the operational impact?
Yep, we have a little time left if you've got something that maybe filed in January, so don't sleep on it. All right, we've spent a lot of time on U.S. Chris, why don't you expand? The aperture info reporting is not just a U.S. topic, but it's global. So give us the TLDR on the global front. When do these rules apply? What are we talking about? Who does it apply to? I know there's a million acronyms here, but how do we dumb it down?
So I was glad I got to do the silver lining before because now the other foot is dropping because you have a whole alphabet soup of reporting obligations. You have CARF to start with, which is essentially the 1099-DA reporting, except for different information slightly. It's more of a purchase sale reporting for people who are resident outside the U.S., as well as if you're in other countries, you'll have to do it for everyone. So that's kind of the most immediate one. You also have CRS, and CRS not only comes with a slightly different flavor in every country. The ongoing joke for the last 10 years is it's neither common nor standard. But now we have CRS 2.0, new and improved and different. So not only are you dealing with CRS slightly different in every country, but now it's different people are adopting the 2.0 standard at different times. So what you're reporting is going to be different if it's in scope or out of scope for CRS. There are things we were at the Working Party 10 group in Paris last week, trying to get them to agree that if things are reportable for CARF, they shouldn't be reportable for CRS. They weren't quite getting it. We don't expect that they're going to be.
At least not in the immediate future.
Not in the immediate future,
Yeah.
yes. I think
Yeah.
we'll get there eventually. But in the immediate future, you may have to report under multiple regimes. Then there's CSOP, which is, thankfully, same working party, actually different. Working Party 11 is gig economy, and they took a very, I think, healthy approach. They said, if you're reporting VAT under an existing regime, if it's a digital asset, you're reporting under the same regime. You're just going to take the fiat currency value of that at the time of the transaction, and you're going to report that. CSOP is an attempt to ensure that there's no fraud going on in those transactions. So you have additional reporting obligations there. DAC 8 is essentially CARF and CRS reporting in a European context, and there's, I think, a couple others that I'm forgetting, but not to scare everybody, but there is more coming behind. Don't think the 1099-DA is the end of it. It's the beginning of it.
So if you have a global presence, basically what we're really saying is, yes, you have your DA reporting issues this year, but then there's all these other potential reporting obligations that you may or may not have. And as a service provider, one of the things I always say is that creating the execution or the schema types that to deliver the reporting, that's the easy part. It's the data aggregation because for CRS, for CARF and CRS, it's very transactionally driven reporting. So getting all that data in a good place and aggregating that and then carving it out is the hard part. That's where I'll give Pat and the team a little bit of a plug. That's where folks like Pat and others can help with that data aggregation because that's extremely important as part of this.
And one caution I'll add here, 1099-DA is U.S., CARF, CRS, at least for now, seems foreign, outside the US. But one thing I've learned kind of working in information reporting in the Bay Area is that tech companies have an ability, and I would say an expectation to scale globally very fast. And that expectation doesn't always exist in TradFi. And so today you might have one impact set, but you might be called into a meeting tomorrow where all of a sudden we're launching in 3 countries and we need to be ready to go.
Yeah.
And so I think it's very important that you have that perspective with your business about there's a lot of stuff out there. It's different in each country. There's a lot of commonality. That's the way the standards are designed, to not make it too much of a headache. But it kind of is a big headache because it's jurisdictionally enforced. And again, tech companies like to scale fast, and you get the call after the decision's already been made to roll out the new product.
And I think the importance of that is having, whether you're building a proprietary solution, if you're working with a service provider, making sure that they're nimble, to your point, Peter, being able that whenever because it is true, you're going to wake up one day and say, oh, now we're working in Lithuania. And I'm obviously exaggerating, but the point being is that we've seen that before. No, what I mean by that is within a day. Yeah. So but my point being is you're going to get those type of conversations where it's very quick and you find out.
All the IT from Ukraine went.
Yeah.
Yes.
Yeah.
They didn't disappear.
I was just using Lithuania as an example. But the point being is you have to make sure that you're going to either have a proprietary tool or a third party that is going to be able to be really quick to market and nimble enough and ensure, obviously on the other side of it, that they're also compliant.
This is an important topic because crypto inherently scales globally quickly. We have fewer limitations on going global. And it's not uncommon for us to get a list, hey, this is where we're going next. And it's got 40 countries on there. I'm pulling on my global map. Where are these places? This is real. And to your point, Peter, this is unique in the Bay Area a little bit, right? This is what's coming next. And so to get ahead of it to the extent that you can. Best practices for readiness, this seems awfully burdensome, doesn't it? So where do you start?
I'll just go back to 2 things that I said earlier. Tax documentation up front, because we didn't touch on it. One of the topics at the OECD meeting was also self-certifications and documentation. Making sure you get that documentation up front is part of the readiness. And then again, going back to whether or not you're using a third party or a proprietary build, making sure that you have the appropriate systems and solutions from a reporting and execution side that's going to be nimble. The other thing I would also mention, it's very small, but the IRS are also, on top of all this, they're moving away from the existing FIRE system that they've used for years in terms of the tax reporting solution that they use. So it's a brand new system on the IRS side. You have to make sure, whether you're building a proprietary solution or using a third party, that you are fully integrated with that application as well.
As if things weren't hard enough.
Exactly.
And I would go a little bit, I think execution is very important. I would say it's maybe half the battle. The other half of the battle is governance. And what I mean by governance is probably somebody at your company needs to have a serious point of view on this and understanding of it. And that may mean they have one of us on speed dial or another advisor who they can call. But being aware and understanding how this applies to your organization so you can pivot and move, so you can engage to do the execution. I see the failure on both sides equally. A lack of attention, a lack of good governance, and making somebody, whether that's in tax, operations, wherever, responsible, is probably a key step.
Yeah. And I guess kind of the last thing is information reporting is required. However, we haven't gotten guidance on how all this is supposed to be taxed. So wash sales, straddles, 988 interactions, 1256 interactions, mixed straddle interactions. None of this has been defined. People have ideas. Does 475F apply? Can you mark to market these positions? None of this has been firmly defined. People have thoughts, but
I'm so glad you added that because we have clarity in very few areas from a tax perspective, and yet the reporting is inked, right? So somebody's got to make a call, and that's got to be somebody in management who's well informed. Yes, you can use your advisors, you can read all kinds of stuff, hire your counsel, do what you want to do, and someone's accountable in the company. So someone's got to jump on the grenade. So this has been great, very informative. Thank you all very much. Thank you for having us, Pat. This is awesome.
Thank you.
All right, we'll be around.
I would like to acknowledge one of our other sponsors, so S&P Global, who you just saw Bill up here speaking. Come on back up, Bill.
Great, thank you. So we obviously are focused on areas like indices, focusing on coming up with stablecoin ratings and things of that nature. So, but within our group, again, we focus on information reporting, tax withholding, due diligence. We work with, with Pat and his team working on that execution that we just mentioned in terms of information reporting, but also really focusing on outside of the U.S., working with a lot of our clients to handle some of the other regimes that Chris just mentioned. So,
We've been talking about information reporting a lot.
yeah, that's true. Because I
It's
remember
hitting.
3 years ago we were down in
and then they're like,
Austin.
oh, maybe not this year, maybe not that, but it's finally here. I mean,
Yeah.
January is the day. This is the
And
drop
trust me,
dead.
from a business perspective, I'm sure you know what I'm talking about as a business leader. Saying, yes, it's coming, it's coming. I'm no longer the little boy that cried wolf.
Yep.
It really is here. And, so again, happy to be here and certainly willing to take any questions from the group. We have Chris here and a few other folks, as you saw in the back at our booth. So thank you.
Amazing.
Appreciate it,
Thank you,
Pat.
Bill. Thank you for your continued support.